Mr. Sanjeev Bajaj, Managing Director of Bajaj Finserv, to talk about business environment. Sanjeev, always a delight to have you back on ET Now. Thank you for joining us. Sanjeev, at a time when cost of capital is going up, it is getting increasingly difficult for consumers to borrow money and service their loan repayment. What is your observation? Do you think your lending business also is getting affected?
We are seeing a slight slowdown, and this is true in the consumer durable financing space. And it's clearly a result of everything we have seen with respect to interest rates and growth slowing down. On the consumer space, as I had said in the past, we had not seen very large slowdown. We were still seeing reasonable growth. But we are now starting to see the first effects of slowdown post-Diwali. And for example, I think December will be a slower month. It is still not pronounced. I think the lag effect is still taking place slowly, but we can see it now.
Sanjeev, hi, morning. So in such a scenario at Bajaj Finserv, what is it that you're targeting in terms of growth rates for the company?
At the beginning of this year itself, we had projected a low growth rate, and due to the lag effect, our growth rate in the first 6 months of the year has been significantly higher than what we had internally projected. So for the rest of the year, we will meet our budgeted rates. Now, our own growth rates vary across businesses, because our consumer durable business is very different from our SME business, which is very different from the infra financing business. So overall, as a company, I still see ourselves growing in double digit, but moving onwards, we are going to be more at the lower end of the double digit growth rather than the 25-30% that we saw in the first half of the year.
Sanjeev, what are your estimates on interest rates, and how soon do you think Reserve Bank of India will move? Do you think they will move in the next credit policy, which is due in the second week of Jan, or they will only move in April when they will be announcing their big annual credit policy?
Well, so two different things. What we are hoping for is to see interest rates falling from January itself. And I think this is important now. Growth has overall, not just for what we are doing, but overall has slowed down very significantly, as we've seen from the numbers. The trend lines were visible over the last 6-8 months itself. So we didn't have to come down to such low growth rate on IIP and others before action needs to be taken. But unfortunately, that's where we are now. So I would hope that from January itself, we start seeing a drop in interest rates. As far as our plans are concerned, we will budget in a fall in interest rates towards the end of the next quarter, that's the Jan-March quarter, and start working accordingly. Since again, large part of the lending business is consumer and SME, we are more flexible in passing on the rates, so it doesn't affect us directly much. But rates are peak now. They are at their highest levels. For home loans at these rates, it doesn't make sense to finance a home long term. Infrastructure, we have seen a significant slowdown. Not only are we seeing a slowdown in the new licenses that have been given out, whether it's power or roads, but even for developers at these rates to try and do a long-term infra project is nowhere near as viable as what it was 2 years ago. So I very clearly hope to see reduction rates immediately going forward.
Sanjeev, so what is the average cost of capital access, and what's the outlook on spreads that you have?
We are very well capitalized, so that's one thing, and we're just below 20% there. As far as the borrowing side is concerned, it is mainly through banks, it is through the money market as well as some of the corporate paper that we do. So it's a combination of sources so that we are able to manage our ALM mismatch and cost as well. Our average cost right now, weighted average cost right now would be close to 10-10.5% or so. And as I said, this is weighted average cost, but there are different tenors over there. Now, spreads I will not comment on, because our spreads are something that are related not only to where interest rates go, but it's also related to competition and our own costs. And I don't like commenting on that, but as you can see in the first 2 quarters, our spreads have been very healthy.
Right. So finally, Sanjeev, in your business currently, who has the pricing power? The company, the lender, or the customer and the borrower?
Yes, we've been able to, and that's why you see our ROTA has been fairly stable. But the challenge right now is not just passing on the interest rate cost. The challenge right now is to finding the right opportunities for growth as well as protecting portfolio quality. And that's why we had to tighten up our product policy guidelines across different types of loans that we do. We did this in the beginning of the year itself. We expected the slowdown to happen a little earlier than what it actually did. So with respect to the new guidelines, our business right now is doing okay. But actually this is something that you have to monitor very tightly week after week and keep fine-tuning the parameters, the credit parameters for different product lines. So the pricing issue is not a big issue. The issue will be if things remain stagnant and growth starts slowing down, and either you have to accept a slow growth or you have to find an ingenious way to grow without affecting your loss ratios and your portfolio quality.
All right, Mr. Bajaj, appreciate your time and thank you for joining us.